Welcome to Smart Finance 360, the podcast where money matters meet innovative thinking. Every week, we dive deep into the world of finance, exploring trends, debunking myths, and bringing you the latest insights from industry experts. Whether you're a seasoned investor, a financial newbie, or somewhere in between, this is your go-to source for becoming financially savvy. All right, welcome to another episode of Smart Finance 360, your mortgage and more. Today is mortgages. We're going to talk about the bank statement loan. I got Cam here. He is a bank statement loan expert. He's a stud. He just recently closed a few this last month, didn't he?
I did. Yes, I did.
So we're going to talk a little bit about what is a bank statement loan, why someone may want to look into getting a bank statement loan compared to a conventional loan. And typically, the most important, part of this is you're going to want to be self-employed. So we can do loans for people that aren't self-employed, that have a lot of money, but we may look at different options that might not be the bank statement loan in that scenario. That'll be a different episode. But yeah, Cam, tell a little bit about what, just in a quick nutshell before we start, is a bank statement loan.
Well, a bank statement loan, it gives you the flexibility of, as a business owner, that you don't like paying taxes with Uncle Sam, but it still allows us to show that you do make money and can qualify to buy a house.
Yeah, it's great. So if you have great deposits,
Yeah.
and you're crushing it in your business, and at the end of the day, when you're about ready to submit those taxes and you're like, oh, that hurts. Maybe I should buy the truck. Maybe I should buy equipment, or maybe I should do all these other things and invest in my business. That's when you can look at a bank statement loan.
Yeah, absolutely. I had an individual that I closed one with. He was making well over six figures a year, and but his taxes did not show that, and I don't blame him. I don't like paying my taxes either.
I don't know anyone who does. Actually, I do know a lot of people who are okay with it, oddly.
Weird people.
But I don't.
No, I hate it. I looked at my pay stubs and everything last year, and I was like, how did I lose that much money to the government?
Mm-hmm.
And I didn't get it all back in my tax returns, which was super frustrating.
So tell me a little bit about that situation with the bank statement loan. Let's get in the nitty gritty of it. So how it works is typically you can do a 12-month or a 24-month bank statement loan. So how it works is you request 12 bank statements from their business or their personal, or both, depending on what we got to source. And then how does the underwriter kind of look into that? What do they look for with those bank statements?
Well, with those bank statements, what their primary concern is how much money is getting deposited and where the money's coming from. It can't just be you're getting a deposit from another transfer of like a family member or something. Mm-hmm. It needs to come from a business expense that is your actual income. So those are super important to make sure that they're outlined properly in your account, so that when we do go through it, it's easy to identify, so that there's really no questions about where your money came from.
I'm so glad you're on this podcast, because it's really great to talk about it. And this is a bank statement loan is not like a conventional loan where it's in the non-QM world. And how that works when it's in what's called a non-qualified mortgage are these loans are not backed by Freddie Mac and Fannie Mae.
Right.
So these loans are a little different, right? These are private investors. I like to say sometimes even investors in Wall Street, when I talk to lenders that we use, we wholesale to these investors that want these loans because these perform well. Like Absolutely. A lot of people make great money and they don't show it on their taxes, but they have their deposits. So the underwriter is going to look at the deposits and they're going to qualify the borrower out of the gate. They're just going to take your deposits by 12 months. And let's give an example. So let's say you have 10 grand a month that you make. Out of the gate, they're going to take the 10 grand, times it by 12, 120. They're going to divide that by 2. Mm-hmm. They're going to divide it out of the gate, 50%. And people say, well, that might not make sense for me because I can't qualify for $60,000 in this hypothetical scenario. But what they can do is they can get what's called from the CPA an expense ratio, basically. Mm-hmm. And this ratio, it shows that their expenses are way less than 50%.
Right.
So in that point, they bring it up. And they could bring it up to sometimes 90%. So at that point, you could be qualified up to 90% of that $120,000. Now, some of these other self-employed individuals, if they're making $1 million a year, they may not even need that, expense factor ratio from the CPA. They don't even need that letter because 50% is just good, we're money. But there are ways around working with that.
Right.
There's also ways around with it. You can get P&Ls figured out. They can look at that. And what was the other one that they look at? Do you remember on that? there's some extra things depending on the investor what they'll look at outside of the expense factor ratio.
And I think it's important to mention there that like each investor, because this isn't one of those loans that are backed by the government or by Fannie Mae and Freddie Mac, that these investors can request anything that they want that are going to make them feel better about approving that loan. So one investor might ask for a P&L to go with their bank statements, where another investor is not going to ask for that. Yeah. So it's going to be important to work with a loan officer who's an expert at it, that knows the investors that they work with, what's going to be asked, so that we're not missing anything.
Yeah, and in full transparency, the reason why I love these loans so much is most loan officers won't do these.
No.
They're not easy loans.
No.
They're harder. You have to know your stuff. You get exposed immediately if you're a good loan officer or not with these loans. Right. So some get scared, but their number one problem I think loan officers deal with is, first, their companies usually don't do it. But what their companies do it on the brokering side, they pick wrong investors. They work with the wrong investors that are slow. They don't do a good job because they may be the only investor they're signed up with.
Yeah. Or maybe it was offering the cheapest rate.
And when it comes to bank statement loans, we'll talk about that, the difference of conventional rates, bank statement rates, but you're right on the bat there. The most important thing, I think, as a loan officer in this sector, non-QM, is does it fit the box for the investor?
Exactly.
And they get the home. Right. That's going to be the most important piece on this. But I wanted to emphasize it is so important to have a good CPA with these loans. If you have a crappy CPA or you're doing like H&R Block, you will not close this loan. You need a good CPA that knows their stuff, and you need to have a thorough pre-approval process with the loan officer and the CPA. So I always recommend, I had a self-employed client that called me the other day, and he does really well, and he uses, like H&R Block or something online. Those are, don't get me wrong, I'm not like defaming them at all. Like, they're great companies to work for like if you're a W-2
Absolutely.
person. Yeah, go ahead.
Deductions, stuff like that.
If you have like really intricate taxes and you want to do stuff like bank statement loans and, all these other investor loans, like, you need a good CPA.
Yes. I completely agree with that. When I was helping this individual that I'll probably reference pretty frequently during this this podcast, I was in constant communication with this CPA because we were right in the middle of, they had filed for an extension on their taxes. They're like, well, what if I decide to pay my taxes this year? Am I going to qualify for the regular conventional or an FHA loan? And talking to the CPA, I said, hey, send me like the write-up of what you're thinking about for your deductions and stuff like that. We did all the numbers, and it still wasn't going to be enough because they still wanted to deduct a good amount, which is a good thing. I mean, again, I don't like paying my taxes. They didn't like paying their taxes in excessive amounts. And having that communication with a good CPA, which, again, H&R Block's good if you're just a regular W-2 employee. You don't have a lot of deductions, stuff like that. But as a loan officer, I can't just call H&R Block and talk to those people. So I need to be able to call your CPA and say, hey, this is the scenario that I have. I need so-and-so to make this much money every single month according to the taxes, or I need to know if I need to go a different route. Mm-hmm. And open communication's golden.
Yeah, it's great. So tell me about the situation that you just closed, because it's a great scenario for people that are listening. Like, it really is. I mean, the down payment, the whole 9 yards here. Like, tell me a little bit about their scenario of how much they put down, what kind of the FICO ratio, that if someone has a credit score, what you'd probably ideally want for this loan. And let's talk about the differences if they were went conventional compared to this bank statement loan.
Bank statement loans and any loan really on the non-QM side, because they don't have all those regulations that like your conventional loans and stuff do, they are going to require decent credit scores. They want to make sure that you pay your bills. We don't want a repeat of the 2008 housing crash that we experienced from just lenders throwing out money, right? So they've put extra regulations for themselves on these loans. They want to see good credit scores. For instance, this individual had like a 780, I think is what it was. Great credit score.
That.
Great credit score. And the amount that he had to bring down for himself was 10%.
That's awesome.
Which is awesome. And you can put down as much as you want. Normally in this sector, 10% is going to be the minimum. but you have to check some boxes in order to get that 10%. Otherwise, it might be 15.
Yeah, usually the biggest piece if you want to get 10% down on a bank statement loan, and these are for primary residence, by the way. This is you're moving into a house that's primary. You're going to want to have a good credit score.
Yes.
That's where he checked that box.
Yep.
If he had a 620 credit score, they're going to be like 25% down.
Easily.
So that's a big thing when you're looking the bank statement route. Now, if this is a regular conventional or FHA, yeah, you maybe could. I mean, at a 620, you're going to have to be FHA for sure.
Yeah.
And you could put a little bit less down depending on the loan amount and where we're at. But that's pretty cool that he was able to write off all his taxes, had great credit, and was able to put as little as 10% down on this loan. Now, with this non-QM loan, which is a non-qualified mortgage bank statement loan, there is a big difference, too, between 10% and 20% in the rate.
Yes. Big difference. And we don't have to get into the details of, like, such the difference because, obviously, we know rates change daily. So if I tell you what it is today, it's not going to be the same tomorrow or within an hour. Yeah. So when you put less money down, it's more of a risk to the lender giving the money because they don't have as much skin in the game. And so they're going to offer a little bit higher of a rate. If you want to come in with 25 or more, you're going to qualify. You're going to get better rates because they're not as concerned that you're just going to default on your loan.
Yeah, a lot of times, though, I tell people when they are filing their taxes, and these are people that are making really, really good money. Their business is booming. They're crushing it. I tell them, take a look at how much, if you want, let's say you want to buy your dream house. You're trying to buy your dream house, and you want to show as much as possible because you want a traditional jumbo or traditional conventional. I tell them to do the math. Do the math of how much that's going to cost and how much you have to pay to Uncle Sam. Look at it. It's a lot of money. And then do the math on doing a bank statement loan. And if you see the difference of the rate is only 0.5% or even a whole percent, do the math. If you see, let's go drastic. Let's say a bank statement loan is 1% higher than a conventional loan. Times that by 12 months a year in interest, it's crazy the math. Then when we do the math, they're like looking at that and they're like, I'm saving more money going the bank statement route and investing in my company and my business and getting the write-offs. It's just something that it pencils in. Now, sometimes it doesn't. That's why I love that. That's what you did, is you looked at the conventional route for this individual. You looked at the bank statement route. He did the preliminary tax. And this is a great time of the year for this because people are doing the preliminary taxes and they can make that decision. Tell us a little bit about how that process worked when you did first get that across your desk of deciding, am I going to go conventional for this client or am I going to go bank statement?
So it was, for this particular case, it was a pretty cut and dry, like, hey, we're going to have to go bank statement. Because as soon as he gave me his taxes, first of all, he had only been in business for 1 year all by himself. So there's some caveat to that. Normally, these bank statement loans, they want to see that you're at least in business for 2 years. However, you can get by with 1 year as long as you came from the same type of industry.
Yep.
So he was a foreman with a big general contractor doing the same type of work and was like, finally broke off and wanted to do it himself. So he had all the experience for the job that he was now self-employed doing. So our investor partners, they signed off that, yeah, he can be in business for a year on his own. And we made that work. So anyway, with that 1 month or that 1 year of taxes, when I went to do all the calculations and read them and all the deductions and everything that he pulled out for this first year, it actually showed that he was like losing money every month to keep his business open because of all the deductions, all the equipment he bought in his first year and everything like that, which is very common.
He's investing in his business.
Absolutely. He's putting all the money back into his business so that he can grow and make more money. I mean, that's the smart thing to do. So as I started running those calculations on his taxes, I'm like, well, he can't qualify for anything because currently it's showing that he's paying $300 a month to keep his business open and he's not making any money. But when we turned around and I said, but let's actually look at a bank statement loan for you instead. You've been in this business long enough that we can qualify with just 1 year. He sent me over those 12 months of bank statements. We looked at all the deposits and he was making like 13 grand a month. And you can qualify for almost anything at 13 grand a month. And we did a lot. We got him a house and first time home buyer actually. So he had been renting forever. He's like, I just want to pull the trigger and I want to buy the house. I said, cool, man. Let's start looking at it. And the bank statement loan was the right one for him.
Yeah, I mean, that's a perfect scenario there. Perfect. scenario there. But it's really cool that you were able to analyze that, because most loan officers would just be like, punt, sorry.
Yeah, can't
Make
do it.
money next
Don't make
year.
any money.
Can't do it. Sorry. No, you actually can. This is how, I love that you showed this is how you can do it. So let's talk about, FICO scores. So long story short, if you have a great FICO score, we can look as little as 10% down.
Yeah.
Only caveat, rates are going to be a little higher. But if it makes sense and that's all you got, then we'll look at that. But if you want to put more down and you have great credit, let's say you put 25% down and you have great credit on a bank statement loan, you are very competitive. And the rates you will see aren't that drastic compared to sometimes jumbo or even traditional conventional.
Yeah, especially right now in today's market.
Yep, in this type of market. Yeah, so I mean, and the reason we're not getting specific rates right now is because if you're messaging, hey, well, what's the rate? Well, call us. I will show you what your specific scenario is.
More information to say what.
You can't just give the rates online because it's just like they change 3 times a day.
Yep.
But overall, long story short, like you will be surprised when you see the difference between, oh, wow, I wanted to go the conventional route and I was going to pay this much to qualify compared to investing in my business and seeing what this is on this side. So great stuff about the non-QM. Let's take a look at, who are the type of people who should consider a bank statement loan. So got a great list here. Self-employed professionals. We got entrepreneurs.
Yep.
Business owners, freelancers. If you're a freelancer, it's a great thing to look at. We can take a look at your bank statements. Real estate investors with multiple rental properties. It's great. Commission-based earners, so real estate agents, sale professionals, people who get a 1099. This is a great loan for them. There's also a 1099 loan, which would be another episode, which is great. And then borrowers with large tax write-offs, but they have strong actual income, like the one you just talked about. So, there's a ton of lists of people that are self-employed, get 1099s that can get this loan. And, it really is great. Another thing I want to talk about is you got to get your ducks in a row for these loans.
Absolutely.
You got to make sure you have your business entity listed with the state. If you need help and you're going to start a business, you haven't done that, you better get doing that. Like get on there, get registered. Your CPA can help you as well.
Yeah.
Because they're going to look at that. That's one thing they're going to look at. What other common underwriting items did you see that they wanted outside of just bank statements?
Other things that they looked at, these ones kind of fell in line with like your traditional lending. We need to see your ID. We need to know that you're a U.S. citizen, or you at least have all the paperwork to get loans here, right? There wasn't much different, and I think that's what's super awesome about the non-QM side is they try to reflect a lot of what the traditional, conventional, and FHA does. Some of the guidelines just might not be as tight. Some might be tighter, depending on the situation. But they just open so many more possibilities and doors for people that, this individual that I helped, he didn't think he was going to be able to buy a home.
Yeah.
So he went to his credit union prior to coming to me to see if they could loan him anything, and they said no. So, but yeah.
Great option. Another thing I wanted to talk about that just to keep their ducks in a row, right? Get out a business bank account. Don't just only do your personal. We can do personal, but to make it cleaner for you so you have a better experience, you're going to want to make sure that you have a business bank statement loan that matches the name of your business that you have in your LLC, that's on your taxes and on or your entity search when you create and build your business online. That just makes things very smooth. And if you're listening to this and you only have 1 year under your belt, we can do 12 months. We can do the most recent 12 months. Sometimes, with exception, I've seen they'll take 6 months. If you are making buttloads of money, they'll take a look at 6 months. They'll divide it by the 12, right? But, that's something they will take into account. Another traditional career of how a bank statement loan has worked in the past is some 1099 doctors. We can do something like that as well, where they are technically employed, but they get paid 1099. This is a great loan to look at, and a big one we work with real estate agents. Yes, they get their 1099 every year. It's a great thing if they have their business and their ducks in a row. But the bank statement loan is something that don't sleep on. If you're self-employed, talk to your loan officer about it. Better is to talk to us about it, because I bet your loan officer doesn't know much about it at all, or have many options.
Not very many of them,
but we do a lot of those, and it's great. And a lot of times, what's more important that we can do is we can get you pre-approved very quick. So
Absolutely.
typically I've seen some loan officers, like, they'll try it and maybe it's their first time doing it, and it'll take them forever to get someone pre-approved. Like, I'm talking weeks.
Yeah.
If we have your statements in front of us, we can get you pre-approved within 48 hours on this stuff.
Oh,
Sometimes
easily.
same day,
Easily.
a couple hours, depending. It depends. We got the technology to get it done, but
Yep.
within same day to 48 hours, no question, we can get you directed to where you need. Because you may find that house you like, and you may see that, oh, I can find this house, and this is something that I can do. I can get qualified for. And another cool thing I love about Cam, I'm glad that you're on, is we've actually been able to do bank statement loans for builders that they have a preferred lender, but the preferred lender won't do those loans. And the builders were a little eerie at first, but now they're seeing that we can do those. And so if you're looking to do a new build, we can help you with these bank statement loans. And the builders are trusting us because they're like, oh, they can package this loan and get this done. And we can help out the bank statement loan crew. So I love it. Any other things you wanted to talk about on the bank statement loan that, if a client's listening here that they maybe want to know about or learn?
Yeah, I think you mentioned it a little bit. You're like, you need to get your business registered. Like, it needs to be a legit business. It can't just be like, for me personally, I trim trees on the side.
Yeah.
I don't have a business license for that. So I couldn't go to the bank. I couldn't come to you and say, hey, I need a bank statement loan using the income that I get from these tree jobs that I do. That just wouldn't work.
Yeah.
So just have your ducks in a row, like, be organized. As a business owner, you probably should be anyway, to make sure that you're operating business correctly and profiting as much as you can. So,
Yep. And now another thing we didn't talk about is they will take your debts in consideration. So if you go out and buy a truck and you put it in your personal name and you don't put it in your business, run it by the loan officer first to see if this makes sense. If you can, A, be qualified for it. B, can you do it in your business versus your personal? Can you do it in your personal? And C, just repeating, please call us before you make any of these purchases, especially if they're large equipment, things like that. But they are going to take account, like a regular loan, your debt. They're just, instead of using your tax returns, they're going to use the deposits, and the underwriter is going to calculate that. And with a good CPA letter, we can bring that income up to be very close to what you make on your bank statements. But just because it's a bank statement loan, they're not going to not just take into account if you have debts. So if you have debts,
we still look at your credit report, and anything that shows on that credit report, we have to show as the things that you have to pay monthly.
Yep. And they're also going to show on their all liabilities. They're going to look at all the liabilities on there, like student debt. There are debt to income restrictions on these loans. Some can go up to 55%. Some are typical between 43 and 49%. But that's where we're the experts, where you find that box, you find that investor for that client, because that's a big thing. And then another thing is being able to educate the real estate market about these loans. Like, I had a real estate agent call me, and they were really weary. They're like, a bank statement loan, it doesn't seem very strong. I'm like, no, this is very strong. We can get this closed. And we closed it in 3 weeks because we got our ducks in a row. We were ahead of the curve, and we had a really, really thorough pre-approval process, and we know our stuff. So, I mean,
a pre-approval letter is a pre-approval letter.
Yeah.
Whether it's conventional, FHA, bank statement, 1099, if you have a pre-approval letter in your hand and it's a legit one from a trusted loan officer that has done these and can perform them, it's as good as the loan itself, So,
love it. Cam, thanks I appreciate you being on here. If you're self-employed and you're listening to this and you're wanting to look at just the differences of, like, hypotheticals of, well, what if, what would I look like right now? Even if you filed your taxes, see what you look like with your conventional loan financing, with your tax returns. Cam will look at that. We'll also look at your bank statements as well. So we'll take a look at the bank statement loan, but, calling us for even 15 minutes, 20 minutes for the conversation could save you a lot of headache, and it could help you, figure out if you can buy a house or not. It really is worth it, and we love it. I enjoy having those conversations because they're great loans. They really are. They're phenomenal. So I think I figured out everything on here. Any last common concerns on this? People say that they're risky, but I don't think they're risky because they care about the cash flow.
I did have a comment on a social media post, like, talking about bank statement loans, and they go, we still do bank statement loans, in reference to the 2008 crash. Like, people were just claiming income and getting house after house after house, and then we had a housing bubble. And remember, there are still restrictions. Like, there's things that are put in place to make them not risky for the economy.
I think they're actually to be quite honest with you, I think they're more
They're
dynamite.
heavily regulated too.
They're more dynamite because they're looking literally at all your bank statements, all of them.
Absolutely.
They're seeing everything. So they see. They're just doing the math there. So
Yeah.
appreciate you, man. How can people reach out? What's something they can reach out and, if they want a bank statement loan?
I'm all over social media. You can find me actually as I just rebranded to go with my phenomenal mustache. Fireman's Mortgage is what I just rebranded myself to. So
Fire.
I'm going to be pushing that out. But if not, I mean, I think that's the best way, honestly. Instagram, Facebook. If you want to call me, I can drop my phone number if you want me to drop my phone number. So
love it. I appreciate you guys. If you have any questions about bank statement loans, put them in the comments. We'll answer anything you need for your situation. Our team's licensed nationwide in most states. I think it's about 48. So if you're, if we're not licensed in that state, we'll at least direct you. We have a lot of friends nationwide too, that in the 2 states that we're not licensed, 3 states we're not. But we can help you get a bank statement loan, and it's kind of our bread and butter. I'm really enjoying these loans. So
yeah,
thanks, man.
They've been great being able to help people that originally thought they couldn't get a loan.